Well, as you know, a spectacular July for stocks. More signs now that the recession might be ending. What about investor psychology? What's all this doing that? Is hope finally beating fear into the ground? Joining us, our favorite trading coach, the man we call Dr. Doug Hirshhorn, and the man whose middle name is Hope, our own Dennis Neal, joining us today. Dr. Doug, welcome back.
Thank you very much.
What do you make of psychology in the market right now? Obviously, a very strong month of July.
Right. Well, let me tell you one thing that I know for sure, and that is people are people. Doesn't matter whether you're in a bull market, a bear market, doesn't matter if you're 100 years ago or 100 years from now, human behavior stays constant. And I'm here in Vegas here at an expo, and this is the best place where you see actually where people actually go back to their instinctual behaviors and make poor decisions. Well, on the casino floor, people make bad decisions. And that's what I'm seeing. Now, what I want to explain is that that's why casinos are in business. In the markets, what we have to understand is that even though there are all these rallies and days, the higher we go up in the market, the more days of continuation, psychologically, there's a fear building inside of a human that says, you know what? What goes up must come down.
It's not going to last forever.
Right. It's not going to last forever. And
I'm going to get hit by that newspaper
before
again.
that, Doug, because before that is the fear of getting left out of this. And I think that could still drive the markets higher in the shorter term.
Yes. But what I am seeing more and more is that as more days pass, people are saying, well, maybe I missed it. And then they say, oh, God, maybe if I stayed in more, I would have. But now they're at the point in time where it's like, you know what? It's got to end sometime soon. What I tell people from an investment point of view, there's a psychology and then there's the objective decision. Stop trying to speculate where it's going to be. Look at the objective data right now and say to yourself, you know what, if I walked in today right now and had never traded before, what would I be doing right now? Would I go long or would I go short? Don't think about where it has been for the past couple weeks and where you think it might be going.
I mean, that's really very difficult to do, is it not, to factor all of that out?
Yes, but that's the discipline issue. That's why there are very few people that actually are able to be successful over time in trading. It's because they have the discipline to actually ask themselves that question on a regular basis and make optimal trading decisions.
What about, we've been talking about all the economic data. What do you make of this cash for clunkers? The response to cash for clunkers, is that help driving the market, or is cash for clunkers doing well because of the market?
To me, the greatest thing about cash for clunkers is it says there are people who are no longer afraid they're going to lose their job, because even with a $4,500 credit, guys, you do not go out and buy a $20,000 or $30,000 car unless you feel like the economy is stabilizing. And I think how we feel can precede actual economic growth. And I think this snapback, watch for business spending, right? I think we're going to have a bigger snapback and maybe bigger growth than people realize.
If you have to replace inventories at a minimum, that could happen.
Yeah, and inventories are low. And already in the most recent GDP, business spending fell 9% instead of 36% or something like that. And I think it's poised for a real positive growth third quarter.
You know, you talk about, Doug, about how we set ourselves up with that fear factor that kind of eats at us even as the market goes higher. But there is also a predilection to want to be hopeful. Right. You know, we're looking for those signs, those green shoots, as we've belabored the
fear fatigue. We're tired of it.
You know, for anything in life, you have to kind of have faith and believe and have hope on an internal level to believe that, you know, focus on the positive, not the negative. That's not a new statement, but what I tell people is that, look, that helps you increase the probability of success. It doesn't guarantee success, so you shouldn't just sit home and think that hope's going to get you there. But in trading, you've got to be realistic with what the data is telling you. When the data changes, you change your opinion and have that always flexibility of going one side or the other side and stop getting stuck into what you actually are thinking that might happen and look at what actually is happening in the market.
Take the emotion out of it there.
Correct.
Yeah, either that or go with the emotion, because times are getting better. The recession is over. The market's heading up. And the bears, I feel for them.
Thanks,
yeah,
Doug.
You were one of the earliest ones to declare that the recession
Good luck in Vegas there.
Declared it a year ago as well. So, all right, thanks a lot, guys.